So, good afternoon, everyone. We are from Group 1, and today we would like to do a presentation. And the presentation is about the case in the Travel in Paradise job costing for a small business journal. And before we do the presentation, we would like to introduce ourselves, starting from me. My name is Putu Daren Sadina, and my last three digit of number is 034.
My name is Nyaman Anggita Aditya Putri, and my last three digit of name is 040.
My name is Grida Fatama Shidatmika, and my last three-digit number is 050.
My name is Desa Amirti Maharani and my last three-digit number is 077.
My name is Karenina Angelica. My last three-digit name is 098.
Okay, so starting from the first requirement.
Okay, so in the first requirement, which is requirement 1, in costing tours travels, what should the cost object be? Why? Okay, so for the cost object for this case is travel in paradise, the cost object refers to anything for which cost data is desired. This could be a product, a service, a customer, or an operational segment. In the context of tours travel business, the most logical cost object is each dozen of travels, broken down by a variety. That's because Thor sells his travels in units of dozens, and each flavor or variety may have different ingredient costs and labor requirements. To determine whether his business is profitable, Thor must understand the cost to produce 1 dozen travels for each specific variety. And are Thor's costs driven by prime cost or conversion cost? Actually, Thor's production process is extremely labor-intensive, involving hand rolling, hand zipping, and meticulous quality control. In addition, the premium ingredients, especially chocolates and specially flavoring, make up a large portion of the total cost. In contrast, his overhead costs are minimal and loosely estimated, since he operates out of his home kitchen and lacks of a formal facility, with traditional overhead expense like rent, utilities, or depreciation. And for the next one is the classification of its items in the table 2 as direct material or overhead material. So before we classify it into direct material and overhead material, of course, we need to know what is the difference between direct material and overhead material. So actually, direct material is a raw materials that become an integral part of the finished product and can be directly traced to it. And for the direct material, as you can see on the list, there are bulk chocolate, premium dark chocolate, premium milk chocolate, cream, butter, flavoring, strawberry balsamic vinegar, sea salt, corn syrup, premium vanilla, sugar, and sugar. I'm sorry. That is because these materials are involved directly to produce the produk jadi atau barang jadi. And the overhead material, it is actually defined as the indirect materials that are necessary for the production process, but cannot be directly traced to a specific product. For the item that is involved to overhead material is decorative icing, Chinese takeout box, tissue paper, business cards, wax paper, and plastic storage boxes. Next, please. Next requirement. Okay, so for the second one is requirement 2, which is in requirement 2, we need to give Thor's estimated sales by dozen for its variety for the prior year, assuming these amounts will be the same in the current year. Develop a table to calculate by variety and in total batches produced, dozens produced, dozens sold, and dozens produced for promotional samples. Okay, so it is actually we need the information from table 1, and we know that the sales data by variety is in table 1 with units is the dozens. And Thor gives away 20% of his production as samples every year by 0.80 or 80% of production is sold. And the regular travels for one batch is 4 dozen, and sea salt caramel is different, which is the one batch of it is about 66 travels with 5.5 dozen. And the formula to know the quantity of dozens produced, sample dozens, and batch needed is actually in Excel. And by the formula is dozen produced is by dividing the dozen sold by the quantity of production is sold. The sample dozens is by minus the dozens produced by the dozen sold, and the batch needed is by dividing the dozen produced by the quantity of one batch. And please scroll down. I need to look at the table. Okay, thank you. And this is the sea salt caramel. Milk and milk and vanilla, and etc. This is the variety, which is, it is actually in the module casus in table 1 in dozen salt. It is actually all in here. So we need to calculate the dozen produced, sample dozen, and batch needed with the formula in the atas. Please scroll ke atas. Yes. Stop. Yes. Which is, we only need to calculate it with the formula that has been given, which is the dozens produced is by dividing the 66 with the quantity of production is sold. It is, please scroll ke atas lagi. The quantity of production is sold, which is, can you click the dozens produced for sea salt caramel, please? Yes, by the, actually it is divided by 4, and the result for it is 82.5. And the sample dozen, we only need to minus the dozen produced minus the dozen sold, which is 82.5 minus the 66, and we got the result is 16.5. And the batch needed, it is actually, we only need to do divided by the dozen produced by the quantity of one batch. It is 82.5 divided by 5.5, and we got the result is 15. Please scroll down, and we do the same. Oh, wait, 2 down. And we do the same with all variety, and we only need to sum all of it, and we got the result for the dozen produced, dozen sample. Please scroll ke atas lagi. Dozen sold, dozen produced, sample dozen, and batch needed is like in the Excel. So that is for the requirement 2. That's all, and thank you.
So now we're moving on to the requirements 3, which will explain by myself. And the requirement 3 is to calculate the cost per batch. So for the A is prepare ingredient. So we already know the prepare ingredients is occurred on table 2 of the journal. So now we should can you please zoom a bit? Just a bit. Okay, thank you. So we should calculate the purchase amount, the resize. The formula is just to times the purchase amount at first with the conversion, and the cost per unit is 2 divided by the, could you please click the formula of the cost per unit for milk chocolate? The cost per unit. Okay. So it is divided by purchase cost and purchase amount. And we do the rest is until the sugar, it's all the same. And for the B table is for basic fondant. So we already know the quantity per batch is from the table 3 from the journal. And the conversion is to the ounce. So we all know the milk chocolate is quantity per batch at first is 2, but the conversion is 16 of the ounce, and then quantity per batch is resized is 32. And then for the cost per batch is, wait, quantity per batch times by cost per unit. We already searched for the cost per unit from the previous table. It's from the cell H65. Could you please search H65? Okay, that is the cost per unit for milk chocolate. And then scroll down back again to table B. And then premium dark chocolate is already the same because the conversion is 0. And then the quantity per batch resize is 6. And then the cost per batch, we can search it again in the previous table. And for the total dark chocolate fondant from here, we just total the cost, the cost per batch, but we don't total it with premium milk chocolate. And for the total milk chocolate fondant, we total it all but except the premium dark chocolate. And for the flavoring, we all know that regular flavoring is 2 tablespoons per batch. And then the cost, we should times it with the previous table from table A. Could you please search it? Yes, on the H79, H70. H70, yes. We should times it with that. And then back again to the table. So we can find the cost is $1.60 per batch. And for the strawberry balsamic flavoring is 3 tablespoons per batch, and then the cost is already same. We times it with 1.5 with the cost of strawberry balsamic flavoring in table A. Could you please scroll up again? Strawberry balsamic vinegar is H71. Okay. So the result we can see. So the result is $2.60. And we move on to table C. Okay. So from the quantity per batch at first and the conversion and the quantity per batch and the conversion we already know from the table of the journal. And from the quantity per batch is 1.5 and etc. And for the cost per batch, the formula is quantity per batch, we times it with the ingredient. So for example, sea salt, the quantity per batch is 0.5, and then we times it with the ingredients. So the ingredients we can see again at the first table for requirements 3 for the sea salt. Yes, we times it with that. And then back again to the table C. And we do it for corn syrup, premium vanilla, sugar, cream, and butter. And for the total sea salt caramel we just times it all the cost per batch. So that's all for the requirements tree. Thank you.
So I'm the one who will explain about the requirement 4. So for the requirement 4 is create a model for cost per dozen. So we already know that Tor have the direct labor for such as $10 per hour. And for the overhead is 0.12 per direct labor hour. And for the samples of production is 20%. There is this thing that we need to highlight. So it's cost per dozen sold is not equal as cost per dozen produced because samples are free, giveaways that raise the cost for sold dozen. So we already know for the regular, 4 batches is equal as 12 hours of labor. And for the 1 batch is equal as 3 hours of labor. That's for the regular, but for the sea salt caramel, 4 batches equal as 3 hours of labor. For 1 batch is equal as 3.25 hours of labor for the sea salt caramel. So if we need to calculate the labor cost per batch, we need to put the hours of the regular and the sea salt caramel hours per batch. For the regular is 3 hours, and for the sea salt caramel is 3.25. So for the labor cost per hour, we need to times the hours per batch for each time. For each time is, so we need to times the 3 hours with the $10 for their direct labor. So we got labor cost per hours for the regular and for the sea salt caramel. And for the overhead per hours, we just need to times the hours per batch with the overhead here. So we got 0.36 for the regular and 0.39 for the sea salt caramel. And for the total, we just need to plus this for the regular and plus this for the sea salt caramel. And there is adjusted cost per dozen sold because 20% is only for the samples. So the production that will be sold is the rest of them. So it will be like 80% of the production. We already know the regular produce 4 dozen and the sea salt caramel produce 5.5 dozen. And the production is sold is 80%, all equal as 0.80. The formula that we will use is cost per dozen and adjusted cost per dozen sold. We already know about the fondant cost. We already see it in the last requirement. So we just need to put it here based of the variety based of the variety using that fondant or not, which fondant. And for the flavor cost, we already know the cost of the flavor from the last requirement. You just need to see it. And for the caramel cost, of course, last requirement, we just need to put it if the variety use it or not. And for the labor plus overhead, of course, last calculation, you just need to put it here. If we base of the variety, of course. So for the total batch cost, we just need to sum of the fondant cost, flavor cost, caramel cost, if any, and labor plus overhead. So for example, sea salt caramel, we just need to plus $13.69 with none of flavor cost, plus with $8.95 and plus $32.89. So we got this. And we do that the same to all of the variety, each of the variety. And then for the cost per dozen, we use this formula, total batch cost divided by dozens produced per batch. So we already got the total batch cost of each variety. So we just need to divide it with dozens produced per batch. For example, the sea salt caramel, the total batch cost is 55.53, and we already know that the sea salt caramel produced 5.5 dozen. So 55.53 dollar divided by 5.5 dozen. So we got $10.10 for the cost per dozen for produce. And then for adjust cost per dozen for the sold, we just need to use the formula cost per dozen produced divided by the quantity of the production is sold. So we already know about the cost per dozen for the sea salt caramel, for example, $10.10, and after that we just need to divide it with the production it's sold. So it's 0.80. We just need to divide it, and then we got 12.62. And we do the same thing to each of the variety. For the required 5, we need to create a pro forma segmented income statement. The Tor wanted to sell all of the varieties per dozen for $18.50. The formula that we need to use is the revenue, COGS, and gross profit. We already have the variety here, variety that we already knew from the last requirement, or you guys can see on the journal. Each of the variety have some dozens sold. Sea salt caramel have 66, milk and milk 48, and so on. For the revenue, we just need to times the dozens sold times with 18.50. So for example, sea salt caramel, the revenue will be 66 times by $18.50. So we got this, $1,221 for the revenue of a sea salt caramel. You guys can do it for each of the variety. So we got this result. And then we got adjusted cost per dozen. We already have this calculation from last calculation. So yeah, you just need to put it here. And for the COGS, the formula will be dozen sold times by adjusted cost per dozen. We already know about the dozen sold, right? And adjusted cost per dozen for each variety. We just need to times this too. Like for example, sea salt caramel, we have 66 times by $12.62, and then we got 832.86. So it's the COGS for the sea salt caramel. Do this for each variety. And for the gross profit, we just need to revenue minus with COGS. So for example, sea salt caramel, we have the revenue 1,221 minus with 832.89. So we got 388.11. Do this for each variety as well. And we sum all of the revenue of all of the variety. So we got this much of revenue and the COGS, and then the gross profit. So how many net income that TORs have? So we need to know about TOR's personal income tax rate. We use 15% because that's the typical small businesses owner assumption unless specified, because on the journal, the income tax rate that need to be given, it's not really specific, or maybe the company that TOR have is not really mentioned much, so we don't know about how many income tax rate that we need to put it. So we assumed that the company have income tax rate with 15% or as much as 0.15. The formula of the net income is equal as gross profit times by 1 minus 0.15 minus the income tax rate. So we put the number, the gross profit is over here. We already have it, the sum of the gross profit. And then because of the with the formula, we got 1,713.96 dollar for the net income. So that's all from me. The next will be percentage by my friend.
Okay, so thank you for the opportunity. Next, we're gonna move to the number 6, where the requirement number 6 is we're gonna analyze profitability per docent. So here we're gonna find the gross margin per docent and the gross margin percent, where the formula of gross margin per docent is selling price. We minus it by cost per docent or sold. And the second is gross margin percent. The formula is gross margin. We plus it with selling price and we multiply by 100. Where the selling price we can see in there is 80.50. Okay, and then we make it into the table where the sea salt caramel, the cost per dozen is 12.62. And for the gross margin per dozen, we're gonna use that formula that I said before. And then what we find is 5.88, and the gross margin percent is 31.79%. Can you please scroll down? Okay, from that table, we find that the most profitable is the sea salt caramel, where the gross percent is 31.79%, and the second is milk-based varieties, where the result is 24.04%. And the least profitable is the dark strawberry balsamic, where the dark strawberry balsamic is 21.21%, and the all other dark chocolate truffle is 22.89%. So even though dark truffle are popular, they are less profitable than the milk-based or sea salt caramel truffle. Okay. For the recommendation, for the pricing strategy, at the first, keep the price for sea salt caramel as is it's profitable and unique. And the second, consider raising price slightly, for example, like $90 until 20 per dozen for A, dark and strawberry balsamic, and the B, all the dark flavor with margin below 23%. And for the sales mix strategy, at first, promote sea salt caramel and milk varieties more, especially to gift buyer. And the second is limit expansion of the least profitable flavor unless they have strategic value. For example, like attract niche customer or gift box variety. And for the optimal trade pricing, the first is store could consider like a premium varieties at 20, example balsamic and cherry, and the B is standard varieties at 80.50, and the second, but only if he comfortable with marketing and justifying the price difference. Okay, that's all for my material. Next, we're gonna explain by my friend. Thank you.
Okay, so it's my turn to present it about requirement 7, where it is talking about sensitivity analysis, where from the journal we know that in this requirement, Thor, or the owner of this company, wanted to change or increase the labor pay from $10 to $12 per hour. So there increase for $2 in the labor pay. And also, he wanted to switch from a blend to 100% premium chocolate. So he wanted to change the bulk chocolate into all premium chocolate. So milk using all premium chocolate and also dark chocolate using a premium chocolate. So in here, we're still using overhead for $0.12 per hour. So we're gonna go straight into the update labor and also overhead, where here, for the regular batch, so here is the new wage is $12. For the hours per batch, it's still the same 3. For the labor cost is $36, and we applied the overhead for $0.12 per hours. Or in here, we times it with hour per batch, where the result for the overhead is 0.36. And we just add it with the labor cost. So we got the total labor plus overhead for the regular batch is $36.36. And for the sea salt caramel batch, we using the new labor pay for $12 per hour. And for the hours per batch is 3.25. And the labor cost that we got from those multiplied is $39. And we also apply the overhead in there, where we got the overhead is $0.39. And we just add it between the $39 from the labor cost and also the overhead. We got the result of $39.39. And in here, we got, you guys could see that the cost rises is around $6 for the regular batch and $6.50 for the sea salt caramel. It's not that significant, but it will give an impact for the next steps. We're gonna go straight into the B1, where in this scenario, Thor wanted to replace all bulk chocolate with premium chocolate. So the amount of premium chocolate that we need to know is the formula is the quantity of bulk chocolate plus it with the quantity of the premium chocolate. The premium chocolate is the total. The premium chocolate that we need is 38 Oz. So it is the add from the previous bulk chocolate. So we add it also with the premium chocolate. If I'm not wrong, the bulk chocolate that have been used in the journal is 32 ounce, and for the premium chocolate is around 6 ounce, if I'm not wrong. Premium dark chocolate, for the cost for the premium dark chocolate is $0.652 per oz, and for the premium milk chocolate is $0.54 per oz. So now we need to know what's the cost for the new chocolate per batch. Where the fondant type for the first one is dark chocolate, where the total chocolate cost for the dark chocolate is around $24.78, and for the milk chocolate is $20.47. So for this, the cost is kind of rising so much because if we could see from the previous one that the cost for the chocolate, for the dark chocolate, for example, is $10.39 at $31. But for now, the dark chocolate is $24.78. So the increase is around $14.47 per batch. So it's kind of like a significant number in increase. Okay, next. Now we're gonna recalculate the batch cost. First, we're gonna calculate the sea salt caramel where it used the dark chocolate fondant or the premium dark chocolate, where the cost for premium dark chocolate is 24.78. So we got other combination also where cream plus butter, where $1, the cup $1, the labor $39, and the total is around 70 dozen per batch for the sea salt caramel is around 5.5 dozen. The cost per dozen is $13.91. And also we need to adjust it with 0.80. So what is the 0.80 is the other overheads that we still didn't know or didn't include it at first. We adjust it with the 0.80. We got the result of $17.38. And the gross margin that we got from the sea salt caramel is around 18.50. But the net profit that we got is around $1.1. So it's dikurangin between the 18.50 with the 17.38. So it's the gross margin minus the cost. So we got the percentage of the gross margin is around 6.03%. It's kind of low to get those amount of margin. So next we're gonna go straight into the milk and milk. We're in here, the milk and milk all using the premium milk chocolate, where the new cost for premium milk chocolate is around $20.47. The cream butter is around $3.38. The flavoring is $1.60. The labor plus overhead in the labor is $36.36. And the total batch cost is $61.81. And the dozen per batch for this milk and milk for all varieties is 4 dozen per batch. So the cost per dozen is $15.45. And we adjusted also with 0.80. We got the new cost is 19.31, and the gross margin in here is a minus. I think it is because the cost is just too high to catch up with the price that sold by the owner. So if we got the negative margin, so we doesn't need to get the percentage. Next. So now we're gonna talk about the update income statement, where in here the sea salt caramel, for the profit for the sea salt caramel is drops from $555 to $229, and also for the milk, where it drops from $348 to $185. Okay, and for these numbers, we got a final recommendation where there is a do not that need to do by the owners. The owners do not need to replace bulk chocolate entirely. It's gonna destroy the margin. As you guys can see previously, all of those numbers is just dropped so much until that the margin is just a minus. So it's going to be a bad impact for the company. And also, if the owner is raised the labor to $12 per hour without offsetting cost cuts or price increases, it's gonna also impact the others, because I think from the sea salt caramels, it's gonna take a lot of our labor. So the labor is gonna be just like so much in there. Instead, the owner could keep using the bulk and also premium blend, because it is the best cost that you could get with the price that you've been selling. And also, if Thor wanted to raise the wages, so Thor could increase price per dozen to $21. Also, he could reduce the free samples from 20% to 10 or 50%, 15%. And also the last one, it could improve the batch efficiency. So he got more output per labor hour. And I think that's it from my material. The next requirement gonna be brought by my friend. Thank you.
Okay, so the last is requirement 8. So it is like to sum up the calculation that we have been made and a recommendation to Thor Rasmussen and for their travel business. So number 1 is summary of findings. Number A is cost structure. The first is your travel are primarily driven by direct materials and direct labor, which is prime cost. And the second one is most of your costs stem for premium ingredients and the time-intensive handmade process. And the B is cost per dozen. At first is after accounting for materials, labor for a $10 per hours, and packaging and overhead, your average cost per dozen sold range from $12.62 for sea salt caramel to $14.58 for balsamic. And the second one is with a selling price of $18.50, your gross margins range from 21% to 32%, with sea salt caramel being the most profitable. And the C is for profitability. The first one is your estimated net income after tax is $1,713 for the season. And the second one is flavors using milk chocolate tend to be more profitable than those using dark or specialty ingredients. And the third one is promotional samples, 20% of production, increase the effective cost per dozen sold by 25%. Please scroll down. Okay, and the D is sensitivity analysis. The first, if you increase labor to $12 per hour and use 100% premium chocolate, your gross margin would shrink drastically or go negative. Number 2, under those conditions, sea salt caramel's margin drops to 6% and milk travels become unprofitable. And the last is, therefore, the business cannot sustain both changes simultaneously without increasing price or cutting costs elsewhere. And we move to the recommendation. Number A is maintain current chocolate mix. So continue using a blend of bulk and premium chocolate to balance quality and cost. The B is labor cost strategy. So if you must raise wages to $12 per hour, increase your selling price to $12 to $20 to $21 per dozen, especially for complex or specialty truffles. Number C is reviewing pricing tiers. So consider premium pricing for high-cost varieties like strawberry balsamic. Use your reputation and product story to justify a small price increase across the board. Number D is optimize sample strategy. So for consider reducing sample volume for 20% to 10% until 15%, or targeting it more strategically. For example, only for new customers or new flavors. Number A is focus on high margin products. So promote sea salt caramel and make varieties which contribute the most to profit. So this analysis shows that your business is profitable and has strong potential, provided you remain cost-conscious and strategic about growth. So with slight price adjustment and smart focus on your best-performing products, your travel venture can continue to thrive. So that's all about the requirement 8. Thank you.
Okay, so that's all from our presentation, and we hope that you guys can understand about our presentation, and we would like to say sorry if there are many mistakes in the actual or maybe in our words, and have a nice day.